Airlines Confidential with Scott McCartney is made possible with support from RTX, Collins Aerospace, Pratt & Whitney, and Raytheon, connecting and protecting our world. Visit RTX.com. Infinity Flight, the leader in Cadet Academy flight training programs. InfinityFlight.com. Ontario International Airport in Southern California. SoCal, so easy. FlyOntario.com. And by Cirium, the world's most trusted source of aviation analytics. Cirium.com. We also welcome your business's support. Contact us at airlinesconfidential.com.
Welcome to Airlines Confidential. I'm Scott McCartney, and we have so much to talk about this week that I'm going to do some speed podcasting. Like, here's a story. Elon Musk called Michael O'Leary an idiot for not wanting his Starlink internet service. O'Leary called Musk an idiot, and O'Leary launched a successful idiot sale, once again capitalizing on media attention. There, all you need to know about that one, right, Dave Hilfman? Welcome back, Dave.
Thanks, Scott. It's great to be back on with you and the Airlines Confidential audience. And yes, that's all you need to know about Michael O'Leary and his gang at Ryanair. Truly master marketeers. And I mean, who doesn't love Michael O'Leary? Except for, maybe a few European regulators. And I just love him. I mean, he's obviously brilliant, done amazing things for the shareholders at Ryanair and carries tens of millions of humans around the European continent. So anyway, it was hilarious to see that whole match, pissing match, I guess you could say, between he and
yes.
Elon. And wouldn't you say Elon probably should have given Ryanair the Starlink service for free? I mean, considering all the attention that has been raised and generated, I mean, all airlines might end up with this Starlink service. So anyway, we'll see how it plays out, right, Scott?
Yeah, no, the Starlink thing's interesting. My understanding is, some airlines want to offer it for free to customers. That's a condition of getting it with Elon. You have to offer it for free, but then you got to pay Starlink for the service. And by the way, there is a fuel burn issue, so. It's going to cost the airline something to do it. And Michael O'Leary's point was, we fly short flights and we're a bare bones discount airline, and we're not offering free internet to everybody.
Well, most of his decisions have been spot on. So I wouldn't want to question him. Yeah. I figure at some point they'll figure it all out and everybody will benefit. Well, hey, Scott, I know we do have so much to talk about in this show. Before we get going, I wanted to congratulate you. I've listened to a bunch of the podcasts, the last couple of months since I've last been on. Loved Oscar's show. Of course, he's always incredible. And Maya Lieberman and Mr. Harteveld and Charles Duncan. And anyway, just great episodes. Obviously, you have these fun and these sharp co-hosts. And then you've got some great guests that have been on. Just really impressive. And I know that the audience of Airlines Confidential continues to grow at a pretty fast clip. So again, that's in very large part to you and your team that does all this great work and the research. So anyway, just want to let you know, it's just been great shows, and I'm sure the audience agrees with me. And again, keeps growing. So you got to love it.
Thank you, Dave, and thank you to all the guest co-hosts. This has just been so much fun and such a delight, and I'm so glad listeners have enjoyed it.
Yeah, no, great stuff. And I know all the guest co-hosts have been thoroughly enjoying the opportunity. I did want to mention, of course, with all the NFL action, and of course, I know you've got a global audience, but for those in the U.S. in particular, congrats to the fans of the New England Patriots, as well as the Seattle Seahawks. Pretty spectacular games. I know not everybody's happy about these results. Condolences, of course, to the folks in the L.A. area for the Rams fans and obviously the Broncos fans. They're all great teams. Should be pretty proud of what they did for the season. I mean, it's pretty amazing stories. And now, of course, ending back up at Levi's Stadium in the San Francisco area in about 2 weeks. In fact, my oldest son, Marshall, and I, the last Super Bowl I went to was at that game in 2016. I don't know if you remember that one. But I think it was Elway, maybe Elway's last game, or anyway, one of those guys. It was a spectacular game. Oh no, Peyton Manning. Maybe that was it. Peyton Manning. Elway had been about 20 years ago.
Yeah,
but it was so much fun there, and I know that for the airlines, they always think this might be revenue generative, but it really isn't, because a lot of business travel tends to stay away from when you get these big events. But I figure it's got to be good for San Francisco and all that's going on. So that was one thing I wanted to mention. Third, I know you've already talked about Glenn Howenstein, and many people have saluted his extraordinary career as he's retiring at the end of February. But I did want to also another shout out to him. I may have mentioned it the last podcast after we'd heard about his retirement. But what a extraordinary guy, amazing mind. Now, I will tell you, during the Continental days, Glenn, of course, was running scheduling. I was in running sales. I won all the arguments with Glenn. I just want you to know that. He thinks he won, but the customer always wins, baby. And Glenn, love you. You did brilliant work with all the carriers that you were involved with, Continental, Alitalia, obviously his amazing run at Delta, and wishing him the very best. I mean, we're going to get him on as a guest at some point, right? For hours and hours.
Yes, absolutely. And by the way, I've been working to get Michael O'Leary on too. So both I hope sometime in the future.
Oh, they would be
look forward to.
Yeah, they would be spectacular, both those guys. So anyway, Glenn, congrats. As Scott Kirby mentioned in the earnings call, he was saying something about, as only Scott's to say, boy, his timing of retirement was spectacular in light of United's ascent and all that's going on. But Glenn, really such an amazing contribution to the entire airline industry. And I am sure he's going to have a spectacular time in retirement. He may show up doing some little thing here or there, like a number of us who've retired from maybe the full-time grind, but we love the industry and still like to be involved here and there. So anyway, good luck, Glenn. Enjoy yourself. Well-deserved. Finally, before we get into the meat of the show, Skies, very blessed that I get to go back and forth between San Diego, California and Melbourne, Australia, with family on both sides of the Pacific. Did spend the holidays there with my two kids. Well, Marshall, 22, and of course my little boy, Jordan, 6, and my wife, Suzanne. But on the return, Marcel Fuchs, who I think you've met and know, was retiring from United Airlines after a very distinguished, lengthy, successful career. He was VP International Sales, and they had a big retirement party for him. He's based over in London. So I decided to go ahead and cash my 401k out and buy a swanky ticket up front on Emirates, flying from Melbourne to Dubai to London Heathrow.
Nice.
And I got to tell you, that was quite spectacular service. I mean, between what seemed like a 20-foot bed to 10-foot theater screen, the caviar, the dom. Now, the one disappointment is I thought Jennifer Aniston was included with the shower scenario. I mean, I did take the 5-minute shower, had to, because I'd never flown on an A380, always wanted to do that, and finally got a chance. 14 hours from Melbourne to Dubai, and about another 7.5 Dubai to London. But yeah, as it turns out, Jennifer was not a part of the shower thing, but it was amazing. So I'm shouting out to the fine folks at Emirates for that. I mean, I did help their bottom line for sure, but had a great time, good flights. Marcel's party was amazing. My former, essentially my successor, Doreen Burse, the SVP of Worldwide Sales United, she and her team did a beautiful job celebrating Marcel, who really was pretty legendary in the airline business. So it was just great to be able to salute him in his retirement. A lot of good folks you would have known there beyond Doreen. I saw Mark Schwab, former United exec, CEO of Star.
And we've had Mark on, I think.
Yeah, and Graham Atkinson, used to be at United. Saw my old buddy Bob Schumacher, used to be running lots of Europe for us at Continental and United before he retired a couple years ago. So anyway, just a great time. So I had to bring you up to speed on that, and I hope the audience will indulge me with all of that. But it was what a great holiday and what a great flight experience. Have we talked about that A380, right? You've done that many times, or at least once, or what?
I've done Emirates business class once. It was an A380. I've done Qatar business class, but never had the shower.
One day, pal, you're going to go ahead and cash that 401k out. Might just be worth it.
I don't know. A 5-minute shower on an airplane just does not sound like a good time to me.
Well, it's quite the adventure. The turbulence is extraordinary, and
thanks.
We're going to have a sidebar on that. Well, listen, we know there's lots of earnings to talk about. We also, of course, on a serious note, in the middle of a terrible storm that has gripped much of the country, kind of extraordinary. We have news about Spirit. And when don't we have news about Spirit, Scott? I mean, we have news about Spirit all the time. And maybe most importantly, we do have that famous Wall Street Journal annual scorecard of airline performance, which, of course, I know is near and dear to you since you created it, the man, the myth, the legend. And, of course, if all that isn't enough, we have a special guest as well, John Heimlich. We know John Heimlich. He's the famous chief economist for Airlines For America. And, again, congrats on the fact that you created that whole WSJ airline scorecard, which has carried on. Your legacy carries on in many ways.
I know. And I love that they have carried it on because I do think it's important. So I had a great conversation with John. I love to check in with John from time to time just to get a read on the airline economy. And yes, my recollection is John is related to the Heimlich of the maneuver.
I think he's right.
So yeah, I think he is. Dave, you mentioned the storms. Sunday was really quite remarkable. According to Cirium, 45% of all the flights in the U.S. were canceled. Was the highest cancellation day since the pandemic. This storm covered 2/3 of the country. Snow, ice, and record cold temperatures. Just been really tough. And no doubt that's going to be a hit to airline first quarter results. So let's talk about the Wall Street Journal scorecard, because as you noted, it is really important to me. And I do think it's important to the industry. It is I think, the most thorough data-driven report card on airline performance. It matters to travelers. I know it matters to airlines because several of them I know track the same metrics that the journal scorecard uses.
In a big way, Scott.
In a big way.
I know that a lot of boardrooms follow this and all the
Yeah. So and it's been going for 18 years now. And what's really fascinating this year is that Southwest Airlines was the winner. And that's really the culmination of huge investment in time and technology and manpower and equipment that Southwest started really after the Christmas 2022 meltdown. I think you have to give a lot of credit to CEO Bob Jordan for making this a priority, and even more than that, to Andrew Watterson, who's the chief operating officer and no stranger to Airlines Confidential. Andrew really has been the brains and the driving force behind the operational turnaround. It's considering the year that Southwest had really quite an achievement. They had major layoffs. They're completely remaking their operation by moving to check baggage fees and starting assigned seats and fees for preferred seats and extra legroom seats and all that. So much change might be a distraction for the operation, yet Southwest has managed to not only keep its eye on the ball, but improve significantly. Really remarkable. Just an outstanding performance and a reminder that I think to all of us, right, to every airline, that reliability is something an airline has to make a priority for it to really happen. A few other interesting notes from this year's survey. Allegiant finished second ahead of Delta. Again, great job, Allegiant. A lot of change there, too. So, running a good operation doesn't have to be a high-cost endeavor. And in fact, just quite the opposite. As we said many times, it's actually cheaper to run a good operation than it is to run a bad operation. Delta slipped to third, and I think that's notable. Really something to watch. Richard Anderson and his team really made reliability and the WSJ scorecard a real priority and a marketing prize with business travelers. Now Chief Operating Officer Gil West is gone. He's the CEO of Hertz. Dave Holtz, another key to the stellar operation at Delta. He's not at mainline Delta. The chief operating officer's job responsibilities are split between two executives. Delta used to be an absolute marvel at the lowest percentage of canceled flights. Last year, it was in the middle of the pack in canceled flights, number 4. It was number 5 in both 2-hour tarmac delays and in mishandled baggage. So is Delta slipping or will it rebound? I think clearly something to watch. Speaking of slipping, American tied with Frontier for last place. And that just can't be acceptable to American Airlines. American was number 7 in on-time arrivals, number 9 of 9 major airlines in the percentage of canceled flights, number 8 in both mishandled baggage and involuntary bumping. If American is going to win back customers, it has to get serious about fixing its operation. It's been near the bottom of this scorecard for a long time, and every year it seems there are promises that next year will be better, and it just hasn't happened yet. As I said before, I think this has become a cultural thing at American, and it's going to take a massive effort to change that culture. Dave, you saw Gordon Bethune change the operational culture at Continental Airlines. He did it by demanding accountability, by rewarding frontline employees with bonuses when the airline finished in the top 3 each month. He did it by creating a culture of winning. Do you think American can turn its operation around?
Well, great question, Scott. And, before I even get to that, I just a couple of comments about some of the things you mentioned. Southwest. I mean, we certainly weren't shy about busting their chops last year, right? As they were trying to figure out what they're going to do. Obviously, had that Elliott Investment Management all over them. They had to make some changes, whether they wanted to or not, and maybe they did, and just were going at it slower before Elliott, accelerated the process. But, hats off to them for really going through massive change, not just, huge commercial decisions about, deciding ultimately to go to assigned seating and provide extra legroom and preferred seats and all the things that they're going to be doing and have been doing and you've got unleashing this upcoming week. I know a number of the folks at Southwest and really good folks. I knew Dave Harvey probably best. He left, I think, last year, a year and a half ago on the sales side. But Tom Doxey, who I know you've met, and know, just an incredible guy. I knew him from his days at United. He left and then went on to Breeze, and then they picked him up Southwest. But
now the chief financial officer.
Yeah, CFO at Southwest. Clearly, very sharp, obviously on the financial side, as you should be if you're the CFO. But he's such a great culture guy and a communicator. I give him a lot of credit for probably bringing some new energy and focus, and they've really done some great things. So anyway, just shout out on those guys. As it relates to Delta, again, amazing track record. You're right. Some of these numbers have slipped. I don't know, if that's for some good reasons and they figure it was just temporary or, some kind of extraneous issues. But I'm sure Mr. Bastian, and particularly if he hears this show, will be, getting his lieutenants together. I'm sure they're looking at those numbers now and will, Delta's pretty strong about responding if they see any weakness in their numbers. Time will tell. And like I said, there have been changes there and more that are coming with Glenn's retirement. But hopefully Ed will agree to come on the show. Maybe he can tell us about all the great things he's going to do down the road to get those numbers back. And then finally on American, listen, I do think they can make these changes. I've talked about them many times and never like to say anything but positive things, from my perspective. But, they clearly had their challenges. They've had them for a long time. I mean, you and I both have agreed that they need to be more like a speedboat in making these course corrections and turning around, and less like an aircraft carrier, which they seem to have been behaving like, because in the end, these reliability issues, which Continental got so focused on, was about specifically the business travelers who obviously traditionally pay more. You love all your customers. Some you just happen to love more than others, and that's the folks that pay more, and usually those are or business customers. So, I got to believe between the talent they have in American, I mean, it's not like they have a bad order book. In fact, they had one of the best order books, and I know they've had those new deliveries going on for a while now, but it just feels like they can't seem to execute upon what maybe is a good strategy. Now, the one thing I know you and I've chatted about, I mean, listen to United's earnings call, and I know we're going to get to that in a bit, but I mean, things like, growing Chicago O'Hare, on steroids, when you could probably find ways to reinvest some of those resources into more reliable operations in your current areas around the country. Again, I know I'm a little biased because I'm coming from the alumni airline side at United. But anyway, American, I know they have the ability. They've certainly proved it in the past. But nothing gives you a lot of confidence to date that they have got a good handle on it. I'm hopeful for them and their employee group and all their customers they have that they do get it. What Gordon always said, and I know I've mentioned it multiple times in these podcasts, and it was just such a critical part of Continental success. I think it's carried on to United. But what gets measured and rewarded gets managed. So whatever they're doing over there, they need to find the right metrics, reward them appropriately. If they do that, I would think that ultimately those issues will get managed properly and they'll come back. So I guess we're going to find out, right, Scott?
Yeah. I mean, the Chicago battle is interesting. American retired a lot of airplanes with the pandemic, and then deliveries got slowed by all kinds of issues at the OEM, at the manufacturers. So they had a plane shortage. They focused on other areas in Chicago, and they're trying to race to build back. And it's going to be tough because they ceded a lot of territory to United in Chicago.
Oh, massive territory. And I did enjoy the line where Scott Kirby talked about, United's drawn the line in the sand, and he means it. And I know you know him well. And, I know American feels they have a natural right to that Chicago big base of operations. But, time changes, things change. I often wonder, should they have been refocusing some of that down to Miami, or do you go over to Philly and build that up? We already know that, that what they've done in Charlotte, and I think we'll chat a bit more about that down the road. But anyway, I have a lot of respect for American Airlines and their important business. Doesn't mean, when I was working at United, we really didn't like them a lot. That was just purely professional, but we wanted to beat the crap out of them. And that's the beauty of the airline business, which, Robert Crandall used to talk about, the most civilized form of warfare out there. And that's the beauty of it. That's why consumers benefit. People get better as, carriers try to find ways to win their business. American just seems to have, I don't know.
Dave, the tough thing, I think, is that, and this is your world, right? The corporate contracts. You can hit a tipping point where more and more companies say, "Oh, wait a minute, United's got a much more robust schedule. They're more. We're gonna switch our loyalty from American to United." And I think that's happened with a lot of companies in Los Angeles. Has switched to Delta in particular, and certainly New York as well. And so, where is the tipping point when you start losing corporate contracts, then your profitability really takes a hit, and it gets hard to compete because the other guys got the more profitable customers and more of them.
Right. No, that's exactly right. And again, I know American, they're proud. They, will say they're investing billions between the fleet and facilities and their technology. I mean, I think based on what you see in the numbers, and again, a lot of anecdotal comments about this, but I talked to a lot of people, of course, still in the corporate managed travel industry, be it on the buyer side or all these top travel agency and top travel management companies. I mean, they said United they've just had some special sauce. It's kind of the magic as of late. Not that American didn't have it for a long time and was beating United, and then that all turned around, and we'll see. But you're right. It's just those the scale of your service, and then all the investments that it particularly in Chicago, what United's made, and they will go on and on about their technology and the soft product and the hard product, and you can go find every aspect. I think American just needs to accelerate, and I know we've talked about this in the things in 2025. We mentioned this. I'm sure they will say they're doing it, and they'll be back on the show at some point to articulate all that. But at least thus far, they just don't hasn't seemed to be quite. They haven't quite got the magic yet, and who knows when they will. Yeah. Talking about those earnings, and United put out their fourth quarter earnings, and so did Alaska Airlines. I think JetBlue, American, and Southwest all released this week after our recording of this podcast. But United said 2026 could be a record year, and certainly 2025 was a damn good one for UAL. In the fourth quarter, United had more than $1 billion in profits, which is not too shabby. And you and I have been around the airline business for many decades, and just to even be able to say $1 billion in a quarter is something kind of extraordinary. I know it hasn't been so much so the last maybe decade outside of the pandemic time period, but it's still kind of hard to believe when you've been in the airline business and you can say that in a quarter. But everything was up for them: capacity and passenger traffic, revenue and earnings. Ticket prices measured in yield was down a bit for United, but their operating margin was a very healthy 9%, and its net earnings margin was almost 7%. So really good for any airline. Alaska was weaker. It put out a cautious 2026 forecast. And I got to say, when you looked at their forecast on EPS range was from $3.50 a share to $6.50. I'd say that's pretty cautious. But I don't think I've ever seen quite that wide a range. I'm not the financial expert or checking out the investment side of it that much. But anyway, it was interesting. But they are making progress with their Hawaiian Airlines integration. Alaska's capacity was up a bit, 2.2%. But compare that to United's 6.5% capacity increase. And despite more seats for sale, passenger traffic was actually down a bit. So Alaska did increase its yield nearly 3%. Remember, that's the one where United was down a bit. So basically, Alaska was holding out for slightly higher ticket prices, or at least they weren't discounting as much as the others. Bottom line for Alaska was that net income earnings, they were $21 million. Unfortunately, that was down 70% from $71 million in the same period a year earlier. That's a net margin of less than 1%, and Alaska operating margin was only 2%. So basically, you'd call it weak profits, but hey, profits nonetheless, which in the airline business, again, it's changed. We've seen carriers become so much healthier and their balance sheets repaired. And I got to give credit. Alaska, just here in San Diego, they have a huge growth push, and it helps that they've got the new terminal here and all that. So obviously, I think they were, I'm sure disappointed relative to what they would have liked to have seen. But considering all the change and activity over at Alaska, I guess they're proud of their employees and all the change they've gone through this past year, especially with the Hawaiian integration and all the other things they've got cooking. And international launches and everything else forthcoming. But I'll give them credit. Their customer service still seems to be great. And I love all the growth in San Diego. And hey, one final note of interest, Scott. There was a report that our friends at Spirit Airlines, who we've certainly busted their chops enough. I know they've good people trying to hang in there, doing what's best for their employee group and their customer base. I know they were in discussion with an alternative investment firm, Castlelake. Sounds a little like a wine to me, a nice Chardonnay. But anyway, maybe that's the new investor Spirit needs to get out of bankruptcy as a standalone airline. I don't know, Scott, what do you think?
I'm just not sure this Castlelake is the answer, Dave. I looked it up. This is a private credit firm, so not private equity. And that's a significant distinction. Castlelake, not particularly large, but the important thing is it provides debt, not equity investment. They call it debt capital, which seems misleading to me. Is it debt or is it capital? But I don't know. in 2024, Castlelake sold a majority stake in itself to Brookfield Corp, a large investment management firm. And, private credit has had its own issues of late. So I'm not saying that applies to Castlelake, but the whole private credit arena. With regard to Spirit, I'm just not sure what asset Spirit has left to collateralize with more debt, right? In the past, Castlelake has done deals where it buys another company's loan portfolio. So perhaps it's looking to buy up some of Spirit's existing debt and then hope that you can make some money. The airline comes out of bankruptcy, improves, the debt gets more valuable, and they make some money that way. But this doesn't look to me like a firm that would bring in new money, that would, invest big money in exchange for stock, new equity in a new Spirit. And that's what Spirit needs. It needs an equity investor. I could be wrong, of course. There's also a possibility that Castlelake sees this as an opportunity to get control of assets that could be broken up and sold off. So I think that, more questions than answers with all of this. So one other item I want to mention, Dave, last week we had a listener question about why American Airlines wasn't investing more in its hub in Charlotte. I had said that Charlotte was American's most profitable hub, but also one where there wasn't really a direct competitive threat. So more assets were now going to Chicago and to Dallas and to other places, including New York and Los Angeles, where American faces more competitive threats. Well, American called to say Charlotte wasn't its most profitable hub. That was actually something that Vasu Raja had told me years ago, so perhaps no longer accurate. Also may depend on how you count profitability. American, however, would not say what is the most profitable hub now. I suspect if not Charlotte, then it must be Dallas-Fort Worth. Who knows, maybe Miami. But American also noted that it has announced it will build a flagship lounge in Charlotte. This goes to the question of investment in Charlotte. The flagship lounge, that's the top tier of American's lounges. American has flagship lounges in Chicago, Dallas, Los Angeles, Miami, and Philadelphia. So coming to Charlotte, but American hasn't yet announced when construction would begin on that flagship lounge in Charlotte.
Well, Scott, thanks. That great recap on that. And candidly, I think it's an outrage that American, would call and tell you that, well, Charlotte isn't our most profitable hub, but fail to, provide the good, exciting details on what is. I guess maybe there's some investment or regulatory restraints around them and all that. But hey, whatever they're doing, when it comes to these lounges, I think it's absolutely essential, especially for your high yield, business class, first class, international travelers. You just got to have it. It's kind of a competitive necessity. And I think it's not only great for your product and for your most important customer or most valuable customers, but I think there's revenue associated that with, their credit card partnerships. And I know that doesn't always equate to the business class lounges. That's usually more for in their case, the Admirals Club, but anything to help enhance their hubs. Again, since we probably busted their chops enough. I mean, anything that is better for their customer service and for their employees too, to be proud of the product, the hard product they've got at their facilities is a good thing. So I'll tip their hat if they're going to do that in Charlotte. That's obviously been a great hub for them. Whether it's most profitable anymore or not, I guess nobody really knows, or they're saying yes, maybe, or no. I have to believe Dallas-Fort Worth is their big engine, but I could be wrong on that one.
Yeah, sure. No, and to the listeners' original question, the fact that there are flagship lounges elsewhere and they're just now getting to it in Charlotte, I think, but American's point was, hey, we are making investment in Charlotte. So want to make that clear.
Yep, good move.
And speaking of investment in Airlines Confidential, it's time now to thank our sponsors who make this podcast possible. We want to thank Ontario International Airport for its support. Ontario International Airport is celebrating a decade of local control. Thanks to public support, the local community reclaimed ONT, revived it as a vital gateway in Southern California, and ensured the airport is ready to soar even higher in the years to come. Visit flyontario.com/10 to learn the story and find out how you can join the year-long celebration of how a decade of local control has turned ONT into one of California's fastest growing and most economical airports. And thanks to RTX. RTX believes no challenge is too great, no question too big, no answer out of reach. That's why RTX never stops striving. The RTX global team works with Collins Aerospace, Pratt & Whitney, and Raytheon to inspire, innovate, and drive progress for generations to come. RTX pushes the boundaries of known science and finds new ways to connect and protect our world. Visit rtx.com to learn more.
We also want to thank Infinity Flight Academy, the leader in cadet academy training programs, for helping us bring this podcast to you. Whether you're looking to build a custom pipeline or strengthen your existing cadet program, Infinity Flight Academy delivers consistent airline-ready results. And for those of you listening who've always dreamed of flying, or you know someone who has had that dream, Infinity Flight has trained thousands of students, many now flying for major airlines around the world. So learn more at infinityflight.com, Infinity Flight Academy, where future airline pilots take off. And finally, we appreciate our friends at Cirium for helping to make this podcast possible. Cirium offers the most accurate and precise data and analytics to enable airlines to optimize their planning, operations, and passenger services. The right intelligence drives operational efficiencies, enables you to predict market share shifts, and helps airlines respond quickly to maximize revenue, manage cost, and seize commercial opportunities. So visit Cirium.com for more information.
All right, let's turn to my discussion last week with John Heimlich of Airlines For America. John Heimlich is a familiar voice to regular Airlines Confidential listeners. He's vice president and chief economist for Airlines For America, which he joined in April 2001. Prior to A4A, Heimlich spent 5 years at United Airlines in financial planning, financial analysis, and international and regulatory affairs. In the latter role, he worked on competition matters, mergers, route cases, and antitrust immunity for alliances. A native of Kent, Ohio, and a diehard Cleveland sports fan, John holds an undergraduate degree from Cornell and a master's degree in public policy from Harvard's Kennedy School of Government. Welcome back, John. It's great to have you with us.
Thanks, Scott. Happy 2026. Thrilled to be back. And one more year of the Brown saying, mate, there's always next year.
Well, hey, could be worse. You could be a Cowboys fan, you know?
Well, I don't know. We can debate that one, but
right. Okay. Well, let's start with looking back. Wrap up 2025 for us. My 30,000 foot view, and listeners have heard a lot of this, I think. But my view is it was a year that started with a lot of promise and predictions of record earnings and stuff. And then it turned into a very challenging year for airlines. There were international feuds, tariffs, and immigration that reduced international travel, and in some cases like Canada, significantly. And then we had a long government shutdown. Along the way, we had major disruptions with air traffic control. And the result was weaker demand, too much capacity, and airlines scrambling to take capacity out so they could boost prices, which did seem to happen towards the end of the year. But is that about it? How do you see the year?
That is a great synopsis, Scott. I would say in many ways it was a redux of 2024, with the exception of some of the larger governmental policy and shutdown implications that we found in 2025. So started off the year very strong. You may remember, and many of your listeners remember, heading into the summer, there was a sense of overcapacity with weakening yields and deteriorating loads, and airlines pared their growth plans quite a bit in the summer 2024, and things sort of started to inflect positively late August, maybe September, and that's almost exactly what happened again in 2025.
Yeah.
with in a more pronounced way, in the sense that we had the duplicate Chapter 11 filings by Spirit, which I know we'll probably
Right.
get to. We'll probably get to, and things came to more of a head.
Yeah. Yeah.
There, I think we also have a similar, although we only have two carriers, U.S. carriers, who've reported their results thus far, and we've got another one coming up. I think most of the analyst community expects a similar spectrum of results, diverse set of results that we did in 2024. So yes, good synopsis.
Yeah.
Just if I could add one data point
Sure.
on the pairbacks, at least for this year. I don't remember what the planning for the third quarter, the July, August, September period had been for domestic capacity. But just to give your listeners a sense of contrast, the second quarter growth was 2.5% year over year domestic available seat miles in the schedules, 2.5. In the third quarter, it was 0.4.
Huh.
So
Yeah.
it was a significant pullback by any means in the third quarter to sort of rationalize that domestic supply demand balance.
And it wasn't just Spirit, right? I mean, Spirit, got rid of 100 airplanes, half of its fleet. But everybody was,
Yeah,
down some.
that's right. At least domestically, every carrier scaled back. Really, everyone across the board. That's right. They
Yeah.
didn't all
Yeah.
shrink, but they pared back their growth plans.
Sure. Yeah. So how did the year end up financially, 2025, do you think? I mean, we don't have
Well,
everybody reporting, but what do you
yeah,
think?
the aggregate again will be single digit profit margins. I think in the aggregate, with peeling the onion at the great diversity of results. So look, we already have United, Delta out of the box. Alaska expected to be the third in the black tomorrow when they come out, and then we'll probably have a group in the middle, and some, particularly at the lower cost end, with some in the red. So
Yeah.
it's very similar to what we saw in 2024. Some carriers were able to pay down some debt, but I think for the most part, even those carriers who are reporting in the black might be a little softer results than what they had in 24.
Hmm. Okay. And how are we looking for 2026?
Well, here we go again with optimism early in the year.
Yeah.
There was a little, just like the stock market, it's been a wild ride the past week or so on the outlook for the year. But I think there is overall confidence in the macro picture. We do have a little feather in our caps with the FIFA World Cup games this summer, which will
Oh, yeah.
accrue some benefit to the airlines. And
Uh-huh.
the tariff picture seems largely settled. Knock on wood, no more shutdowns, and we're, if nothing else, stable on air traffic control. Best case, we improve. I would say we're going in with optimism, but the big source of optimism really in the industry this year is at the micro level, not the macro level. And what I mean by that is sort of a more cautious disposition on capacity, and in particular in the lower cost sector, which really benefits all the carriers in the business. And then many carriers, of course, have significant product enhancements coming out this year. They have the more optimistic outlook for their fleet arrivals from the equipment manufacturers, and so there are reasons to be sanguine for 2026 as of now.
Yeah. Yeah. This may be sort of it occurred to me when you mentioned the premium products. So often in the history of airlines, you plan your fleet for the up cycle, and then the down cycle comes just as everything comes online. Is there a risk here of that? And I'm curious what you think about other risks for 2026. Oil prices, for example, really low. I don't know what keeps you up at night, John, from an airline perspective.
Yeah, I think that you're right about historically that was the case, where the aircraft coming in at the wrong time. I think that has been especially true for a couple of the ultra low cost carriers where they just didn't have enough demand to themselves to absorb that additional capacity.
Mm.
And I think for the rest of the business, the pent up replacement needs are so significant that it's not a problem where it's more okay, we finally get to park that old one that we held on to a little longer where we're waiting for the delivery.
Yeah.
So
Yeah.
I think the answer depends on where you sit in the industry, and I'm less concerned about that. I think airlines have also gotten much better at managing their off-peak capacity and moving airplanes around, and are pretty agile about that. They're not sort of as stuck or as prone to overorder as perhaps some of their predecessors were 2-3 decades ago.
Yeah.
What keeps me up at night, we've seen how profound policy debates have had on the marketplace and how that translates to consumers, whether it's where they think interest rates are going, whether they think there's going to be a trade war in the transatlantic, whether people feel comfortable coming to the United States or feel like they have to share an incremental amount of social media history, either in reality or what they perceive to be the case.
Mm-hmm.
Those are the big issues, I think, more at the macro level. At the sort of micro level and across the airline industry, I think most people are feeling good about their aircraft deliveries. United did mention on its call something that a lot of airlines remain concerned about, which is engine availability.
Right.
As a gating factor for capacity. Not only the availability for keeping aircraft flying, but also for turnaround times on maintenance. I think that sort of MRO sector is still a bit backlogged in terms of the human resources they need. That was sort of a multi-year issue that we got back on track with pilot availability, but aircraft maintenance technicians, either employed by the airlines or employed by MRO shops, is still a few years away from being where we need that capacity to be.
Huh. And that's a manpower issue, not a Pratt and Whitney fan blade issue.
Right. So not just the manufacturers themselves, but all these independent shops that we need both in the U.S. and abroad to do that work. It's largely manpower. In some cases, it's been parts,
Yeah.
and materials, and some of that stems back to the Russia-Ukraine conflict and the availability of materials worldwide, and some related to the pandemic. But I've even read many articles that it's not uniquely an aviation issue, that Ford Motor Company and others were having trouble getting the maintenance technicians and engineers they needed.
Interesting. All right. I'm curious about the Spirit Airlines situation and what it might mean for the rest of the industry. As we know, it's unclear at this point what the outcome of the second bankruptcy will be. It seems clear that something may be coming soon or has to come soon. There was a report out today. Maybe there's talks with a potential new investor. So it could be a new capital infusion that would keep Spirit going. Does seem like there's always someone willing to bet on airlines, whether that's wise investment or not. Maybe Spirit gets acquired by another airline, or maybe it liquidates. So that's something we haven't seen a major airline do in a long, long time. I was trying to think. You might have a better idea. Was the last one Braniff?
Well, someone pointed out Midway Airlines, which granted wasn't as large as Braniff, but
right.
Midway in the early 2000s might have been the last one of any comparable size, because Spirit's influence is much greater than Midway's was at the time. But yes, those things are rare. For sure. Outright cessation.
Yeah. So does 2026 really hinge on the outcome of Spirit? What would it do to the industry if it doesn't keep going?
Yeah. So I don't think I think most other carriers have figured out a path with or without Spirit, but I think there are some of its compadres in the lower cost sector that would stand to benefit. from not having Spirit there as an independent entity, either because of its head-to-head, route performance, or because of its assets, gates, and other things at some locations, so where they could perhaps have a larger footprint. So I think for a couple brands I'm not going to name, it's of greater interest to see a change in Spirit's.
I'll name them. One of them would be Frontier.
Perhaps. I think. I think there's this ongoing question about how much room from a demand perspective there is for that particular model or something akin to it. Right. And I think people to circle back to your interview with Doug Parker a couple of weeks ago, there is a sizable match of capacity now in the form of basic economy, even though it is not flying under a sole livery. And that there's a lot of demand being absorbed by those basic economy seats or by full-scale ULCCs. And something has got to give. And, there needs to be, over time, some rationalization of underperforming routes, underperforming capacity. And, we've seen it in the regional sector, and now we're seeing it in the ultra low cost sector. And that people are either carving out their niche in terms of the business model, or otherwise finding a way to cope with too many airplanes for too few new markets, especially when they're very high gauge airplanes for thinner markets. What's left to penetrate?
Right. So you put a 200-seat A320 in a little tiny market kind of thing.
Yeah, that's the example of the mismatch we're talking about. And in an age where, circling back to the macroeconomy for a moment, we've seen this from Moody's Analytics data that the top 10% of U.S. income earners account for half of all consumer expenditures across the economy, not in aviation.
Right.
10%, half the expenditures. If you crank that up to the top 20%, you get to 63% of expenditures. This is that K-shaped thing that people are talking about, and it's very present in our industry. So that's why you see more and more carriers trying to match or differentiate by product, because price alone isn't going to get you what you want. We're not just talking about extra legroom or in-seat power. We're also talking about a jetway to your airplane and 24/7 customer service and ability to rebook via apps. It's sort of everything matters. And if it's not enough to differentiate by price when everyone has some sort of low fare option, you're going to have to retool. And it's the loyalty program. It's everything, right?
Yeah. Well, I really wanted to talk about this K-shaped economy and what it means for airlines. So the idea, as I understand it, is some consumers, as you said, are seeing growing income and spending power and really taking on more and more of the economy. And then there are other folks who are seeing eroding financial strength, and they're the lower leg of the K. So what does this mean for airlines long term?
Well, it's partly a bet on how durable you think the premium phenomenon is, but you hear many carriers saying almost all of our increase in capacity, in 2025 or 2026 is coming in premium seating. And look, now this year, some of the highlights are, of course, Southwest in a few days rolling out its extra legroom product, in-seat power, all that. Very publicly talking about lounges and transoceanic service, and JetBlue, I think in the second half of this year, rolling out its first-class product more broadly across the fleet. And, Frontier, in its own way, doing many of the same things. And most of the revenue acceleration and booking acceleration has been at the upper end of the product segment. I think one thing a term we heard repeatedly from all airlines of all shapes and sizes last year was domestic main cabin weakness. Domestic main cabin weakness. And we heard that premium revenues outgrowing that, international generally outperforming domestic. And in the last few months, bright spot has also been corporate and business travel. So if you are not exposed to that and you are not exposed to international long haul, you are at a disadvantage. So that is manifesting itself in the earnings results and the earnings calls. Let me just stepping to the macro a moment, and I just recently updated all my CPI data, but just to throw out a few numbers, if we compare full year consumer price index data for 2025 versus 2019, they have air travel prices 3.5% lower. And the overall CPI was 26% higher. So that is a stark contrast. But if you peel the onion on the overall all items a bit, and I know lately fuel's been lower, but over that 6-year time frame, gasoline up 20%, groceries 30%, mortgage and rent both up 31%, restaurants 34%, electricity 37%. So those are just some basic household items, and really, with the exception of restaurants, maybe things you absolutely need: groceries, rent, electricity, and to an extent gasoline. And if you think about the airline clientele, the portion of the clientele that's most exposed to that level of inflation are the lower income tiers who don't have the same substantial housing values or stock market portfolios and 401ks and such. So it affects who can afford what product, and the airlines that depend most on the clientele that is exposed to these affordability issues are working very, very hard and rapidly to retool to that new reality, especially when you combine that with the whole cost convergence phenomenon that many of your guests have talked about.
Right. It's such an interesting issue, and this is really more of a, I guess, marketing question or whatever. But that squeeze on the affordability squeeze on the consumers, that sort of more the typical low cost carrier customer. It just strikes me that I'm not sure the answer to that is put in first class seats, because then those folks aren't going to be able to afford first class seats if they're struggling to afford the ticket in the first place. So
that
you got to attract new customers, and I'm not sure you're going to tear them away from the other guys.
Yeah, my answer would be it can't be the only tool in your toolkit.
Yeah,
I mean, it may be helpful for sure, and you may get some upgrades, but it can't be your sole value proposition. So I think that's why you're saying things with loyalty programs and debit cards and international routes, but a lot of it is, network strategy and fleet strategy and making sure you're not over ordering, and it's investments in IT. There's so many nuts to crack here.
Yeah.
And maybe there just were too many seats in total going after too few customers. So if you can give some of the higher value customers at least a reason to consider your airline, sure, it will help. But I agree, it can't be the whole solution.
Yeah. The CPI data, by the way, this has always been a fascination for me. We have, over history, we have seen airline ticket prices, when you adjust for inflation, keep coming down. And, with the consolidation we've had in the industry, and, a lot of people wringing hands about, what it's going to cost to travel, it just keeps coming down. And can that continue? And maybe we're not looking at it the right way, that when you add in all the fees and the other part of the economy, ticket prices aren't as good a measure anymore of the total cost of travel. But what do you think? Can the industry continue to does the industry have to keep ticket prices coming down?
Well, the answer, it's a good question. And the answer is yes, with conditions.
Yeah.
There were two solutions broadly, historically, to falling real yields, real fares. One was better unit cost performance over time. Obviously, aircraft were a big part of that, operations, work rules, and things, and automation, right?
Mm-hmm.
Supplant, remember after 9/11, we saw the closure of city ticket offices and tickets by mail and a lot of, phone reservation agents, which is now limited to a higher value segment of your clientele. The other big thing, especially in the 2000s and to an extent the 2010s, was load factor.
Mm-hmm.
The best way to offset, right, the falling yields is to have fuller planes.
Yeah.
And we saw, 10, 20 points, maybe not 20, but I have a slide somewhere about historical, actual, and break-even load factors. And,
yeah,
in the 70s, break-even was closer to 50%. And then there was a rule of thumb, it was 2/3 to be full. And now it's probably high 70s, just to avoid losing money.
right.
So that's why even, we hear airlines aspire to double-digit margins, but that's why it's such a high hurdle to get there. It is that phenomenon. So now, so the issue with 2024 and 25, when we talked about the capacity inflection over the summer, is you never want, airlines always want fuller planes and higher yields. What you don't want to see both go negative. And that's what largely in the spring and early summer of 24 and 25, they were seeing loads and yields both go south.
Right.
And that's when things like hit the fan and, we've got to rationalize. So even last year, by the way, most of the year across every major geographic entity, except for Trans-Pacific, we saw loads fall. Like over the course of last year, 1.5 to 2 points average in domestic, Atlantic, Latin, and even Mexico. So at the same time where yields, certainly in real terms, were going south. So now I think there's this, United mentioned, we're trying things with global procurement. We're using automation I'm just using them as an example because their call was yesterday. And
right.
Delta spoke about this, but it's, and how they do MRO and ops reliability. It really is everything. So it's cost control and efficiencies. You've also talked about AI displacing some corporate headcount over time.
Mm-hmm.
And then on the revenue side, it's, as you've spoken to, it's gotten pretty hard to make money just from flying people around. Right. So you bring in better cargo revenues, better loyalty revenues, and a better mix of customers, and that whole ecosystem between loyalty and passenger revenues. And so I think that's part of why they have diversified their revenue bases. Mm-hmm. And, some people balk at that, but it's really a customer benefit because not only does chasing the loyalty give airlines an incentive to invest in their product, either, the airplane, the apps, the airport facilities, lounges, but it also takes pressure off fares for customers because there's another way to make money. It doesn't have to all fall on the ticket price.
Right.
So that's a bit of a long but hopefully comprehensive answer to your question.
No, it's a very good answer, and there's also the age-old debate of does the premium customer subsidize the discount customer? On each airplane, right? The back of the airplane, or is it the back of the airplane subsidizing the front of the airplane? I've always thought it was both, right? And you really have to have both to make it work.
Yeah, it's probably both, but I do think probably lately the demand for premium is at least helping sustain more air service frequency than we would see otherwise.
Right, right. And if you can make money off your credit card program, then you can offer cheaper tickets to get more people on the airplane.
Yeah. And there are little things, we've heard some airlines talk about, many have upgraded their food. I have a chart on that. Food expenditures per passenger mile. Now, now there's competition on, I think we're seeing, ordering even your economy class meal ahead of time and reducing waste.
Introducing that. Yeah.
Reducing, so perhaps you get better quality, what food you're getting, but also if you're reducing waste, there's probably a cost benefit there as well.
Uh-huh. So one other thing, John, I'd love your take from an economist perspective on Doug Parker's assertion about basic economy. And you mentioned this a little bit before, but Doug thinks that basic economy has been really transformative for the industry. And it's much more than just big airlines matching prices of the discount guys. Basic economy with the better technology that airlines have is enabled buy-up opportunities of all kinds, not just in discount airline markets or where you face discount airline competition. Also proven to be a way, maybe a much better way for airlines to sort of differentiate or segregate business customers from leisure customers. It replaces all the Saturday night stay restrictions or advanced purchase restrictions that frustrated people, and it just ultimately didn't work. So what do you think? Is basic economy transformative, or is it just a sort of a tactical way to match?
Yeah, I tend to agree very much with Doug, and that was such a fantastic discussion you had with him. I think it is transformative, especially in concert with the widespread elimination of change fees. So it gave people a lot more. It's really a twofer, and it gave people a lot more feeling of flexibility, particularly in uncertain times. Reduced a great deal of friction. Probably some carriers who had historically very liberal change policies probably lost some of their competitor advantage when we saw a more widespread reduction in the application of change fees. You hit on technology and allowing carriers to differentiate in their pricing displays and things. I think that's right. There's something that's often underestimated or underappreciated. It's also that carriers have gotten much smarter, better about how they price the different products.
Yeah.
And, as and when you wrote the middle seat column, it was often this, 4-to-1, 5-to-1 differential. It was first class or everyone else.
Right.
And it was, the common, well, I can't fly first. I need to win the lottery.
Yeah.
But it's not like that now. For, some attainable increment, you can get a better than otherwise experience. And that can entail a lot of different things. For it's food, it's legroom, it's lounge access, whatever. But they are attainable, especially now you bring in the loyalty program, because it's not always cash out of hand. It's loyalty credit card points and other, you get benefits for your grocery shopping. So in my view, it's made the premium more attainable. And it has also been, as you say, for many carriers, a solution to the market share they had been hemorrhaging to your more bare bones customer who didn't care as much about the experience, especially when you say, hey, for the same price, I can go to Prague on this one and not just, Portland.
Right.
On this other carrier. So I do think so. And I moderated a panel recently where I had John Kirby on, and John started his career at People Express. And I've often thought People Express was way ahead of its time. And this wasn't a new concept to have that bare bones offering. But then many years later, I talked to Monty Brewer after his years as CEO of Air Canada. And, he came up with these fare families,
right,
at Air Canada as a way to compete with WestJet when, what they were offering the customer for the same price wasn't the same package, whether it was bags or anything else. And they needed to have a diverse set. So there was a fair matching option that was apples to apples with WestJet. And I feel like that happened before we saw that kind of thing happen in the US.
Oh, totally.
And,
I think you and I were at a conference, like it was at George Washington or somewhere, where I remember Monty was there. We were talking about fair families. And how they did it. Yeah. And
I think of some have called it like the car wash model, right? You get the basic, the silver, the platinum, and all that. And
what I remember about it was I think you had to buy up to get seat assignments together. I mean, it was sort of the start of, hey, wait a minute, what about a family of 4 traveling together? You're forcing them to buy up to sit together. Anyway, that was one of the issues with it.
Yeah, there were bumps along the way in merchandising and marketing, but I think it's smoothed out where the value proposition is clear. You pay less, you get less, you pay more, and it's not like you have to pay 1,000 more to get something that's meaningfully better. And that, in combination with very significant relaxation and change fees and whatnot, I think has gotten us to a more stable industry. And of course, we haven't even talked about global scale and international, but all those other ingredients come into it. And we're seeing, I think, a general, pull up in the marketplace where I tell people, I've done many interviews with GAO on competition over the years, and I urge them, like, when people think about purchasing a new smartphone, they don't just think about price. They think about what's the better product? What am I getting for this?
Yeah.
And I hope when you write about competition in the airline industry, you think about that too. It's not all about price. It's ultimately value. And am I getting something better or worthwhile for my money?
Yeah, no, well, but that's a huge change in the
It
business.
is. I think, we figured out, many airlines have figured out a way to decommoditize.
Yeah, no, when I first started covering airline, I've told this story before, but David Bonderman of blessed memory, I had breakfast with him and said, what do I need to know about the airline business? And he said, all you need to know is it's a commodity business. And in a commodity business, you're only as smart as your dumbest competitor.
Yeah. And to circle back to your interview with Doug again, he was speculating, I can't remember the time period, maybe it was the 80s, early 80s, but about why didn't American do X, Y, and Z at the time with their legroom and seating. But I think the speculation was that they didn't have the technology or infrastructure to do what made sense economically. And that is one major explanation for what the airlines are able to do today that I think has helped get away from the price only competition.
Yeah, well, the GDS has had limitations, and you could load so many prices, but you certainly couldn't load, this seat costs $59 and that seat costs $79.
That's right.
Any of that. All right, John, it's been fascinating. Thank you so much. Let's hope for a good year for the industry and for travelers. And I look forward to checking in with you again from time to time. Thanks so much for all your insights.
Bet. So great to talk with you, Scott. Thanks for having me on.
All right, we'll be back with more on Airlines Confidential in just a minute.
Promotional support provided by the ultimate AvGeek website, thearchive.net. A vast collection of airline memorabilia, timetables, route maps, rare cabin and airport photos, special flights, and more. All at thearchive.net, the hub of air transport history.
Thanks again to John for a really helpful and insightful discussion.
Yeah, adding my thanks, John. You're the man. Doing a great job at Airlines For America, so well done, sir. So, hey, Scott, in the mailbag this week, Daniel from Ocean City, New Jersey, one of the beautiful spots in the Garden State, he asks a very timely question. So he says, I'd love to get your perspective on your hometown airline and its prospects for 2026. And, of course, I was trying to figure out which hometown airline was he talking about, Southwest or American. But in this case, it is about Southwest. So he says, hey, Southwest figures to get about $850 million in bag fees and another several hundred million in seat assignment fees and maybe extra legroom fees this year. Capacity hasn't dipped, The stock price is already up 3 to 4% this year after being up about 25% last year. So am I being overly rosy in thinking that 2026 could be a tremendous year for Southwest? So what do you think, Scott?
I think Daniel is right on target here. I think there is a lot of money coming in. All indications are that, the fear was, would Southwest lose customers because it was no longer giving away this stuff for free? And Southwest used to argue, we're going to lose more than we bring in. But that's not happening. Southwest doesn't seem to be losing customers. And in fact, the money is coming in. And as Daniel outlined, coming in, in more than $1 billion a year. So 2026, there's so many factors in the airline business, right? What are oil prices going to do? What's the economy going to do? How is it going to be affected by political turbulence or tariffs or immigration or whatever? But bottom line, I think, it could be a very rosy year for Southwest. And as I've said before, this is a really important question, because if it's rosy enough for Elliott Management to sell, then Southwest can reconstitute its board with board members that Southwest wants. And if that stock price doesn't get up higher, then come Valentine's Day, Elliott Management can probably force a complete management turnover and oust the CEO, Bob Jordan, oust Andrew Watterson, and put in their own folks. So this is a really important issue, but as you outlined it, Daniel, I'm with you. I think the money's coming in. The stock price will go up more as investors see that. Now, other people would argue, hey, investors they know this. They've already taken this into account. Stock price about $42 on Monday this week. Is that enough for Elliott Management? No, probably not. So, we'll see what happens. But I think Southwest is hitting on a lot of all the cylinders are firing right now. It's really impressive to see what they've done.
Yeah, they have clearly been executing on what has not been an easy strategy, and all the challenges that go with literally remaking, in some ways, your DNA. And I know they would always say, "Hey, our DNA's never changed. It's all family culture," but they've gone through a lot of bumps in the road. But they, again, hats off to them under a lot of stress. And as you and I've talked about many times, I'd happen to agree with you in the fact that I never thought for a second they wouldn't do better financially. It may not be popular with everybody, but none of the airlines that ultimately ended up maybe unbundling, if you will, and started to, pay by the drink, so to speak, whether it's bag fees or, seat assignments or better seats or more legroom. Everybody loves to get stuff if they know it as one price and didn't have to pay extra. They may not like it, but they will pay for it. And sure enough, Scott, as we talked about a lot during last year, Southwest has seen the results now. People are willing to pay for these things. And listen, for folks that didn't want to check bags, that's a better deal for them, right? They presumably are not paying for other people or subsidizing people that do want to check bags. So it's customer choice.
Dave, and it's fascinating because I think both can be true. If Southwest did this 10 years ago, I'm not sure it would go this well, because I just think the traveling public is more used to paying all the extra fees, and it's accepted. It's, as you said, it may not be liked, but it's tolerated, and so I think Southwest had that going for it. Doing this now. You could also argue, hey, where else are these travelers going to go? If you don't want to pay bag fees, you have no choice now, right? You gotta pay a bag fee, whether you're flying United, Delta, American, JetBlue, anybody, certainly Spirit, Frontier, whatever. All right, well, that's it for another edition of Airlines Confidential. Thank you so much, Dave. This has been a ton of fun.
Thanks so much to you, Scott, and to the audience out there. Thanks for listening. It means so much to us. Have a great week, everyone, and look forward to talking with you down the road.
Thank you all for listening, and hope everyone has a safe and warm and productive week.
This podcast is produced by Mass Media. Info@massmedia.net.